And right now, as we do each and every Monday at 3:15 p.m. Eastern Time, folks, we're going to talk to our man Steve Rhodes. You can listen to Steve's outstanding program, The Trader's Edge, live every trading day, 11 a.m. Eastern Time on Tiger TV and on the TFNN YouTube channel. And check out his outstanding daily newsletter, folks, Mastering Probability. He puts out updates every morning, every market day. He puts out afternoon updates as well, updates when warranted. You get a number of great webinars in there as well. You can subscribe for a month for $149, or you can add 22% off for the 6 month at $695, or more than 33% off for the year at $1195. They all come with a 30-day money-back guarantee. So check it out. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing?
I'm doing well, man. How about yourself?
Doing great. I was listening to you talk about Amazon, and I decided to go ahead and pull up the charts. I've got my black background chart up here where it gives me the volume aspects pretty easy. And I had typed in the den, because I was looking at the weekly chart, that if we close the week above 242.52, that is the high from February 10th, 2025, that we would, and I got to make sure that's the exact, maybe it was February 3rd. Yeah, February 3rd. But if we close above that high, it's going to trigger an A to B equals CD pattern to the upside, and the initial price target is 322. If you notice, the retracement here, the B to C retracement is only 50%, and also notice that prices trade on the left-hand side of the C to D leg. Both of those two things, even individually, but put them both together, are signaling that Amazon should actually do more than a one-to-one A to B equals CD pattern to the upside. Now, we're looking at intermediate, and I'm going to move over to a long-term time frame chart momentarily. So I'm not talking about tomorrow, but we do have that. And so on the weekly, we've got to wait till the end of the week. Does price close above 242.50, and does it do with volume? Or that's what I thought. Okay. Then I went to the monthly chart. I said, well, let me see what's going on with the monthly chart. The B point on the monthly chart is February 2025. The volume there was 783 million shares. Tommy, last month we did 1.2 billion shares. There is a monthly confirmed A to B equals CD pattern on the upside for Amazon that gets us at 322. I say more likely than not, at least 366, the 1 to 1.272. Again, those are longer term charts out there. So I thought I'd just kind of share that with folks out there. Pretty amazing, huh? Amazing.
You know, Steve, you're awesome, man, because I saw you talking in the den, and I was going to say, Steve, I know you always got some stuff you want to go over, but you got to tell everybody what you just said in the den about Amazon. That's what I was going to say, because it's quite a story, man. And, I'm a little bit of an Amazon bull, I am, but today on the news I said, you know what, maybe the fundamental side, because the charts look strong, they do, and thanks for breaking it down. But in the fundamentals, I say, maybe this is like Amazon's going to play a little catch up, because it's kind of surprising, right, that Amazon's got AWS and they haven't had a slice of OpenAI yet. And you have Oracle getting a $300 billion contract. Microsoft's got $250, and finally they're in the door. So, who knows? I bet that they're hoping for more than $38 billion when they got Oracle at $300 billion and Microsoft at $250. Some crazy numbers, but I appreciate breaking it down, man. Pretty cool.
Yeah, the chart patterns look pretty cool. What's nice about that was you were talking about that, and I decided to pull up the chart just for myself to see what was going on, because usually during the show I'm looking at my white background charts, which I'm actually going to put up momentarily here. In fact, let me do that right now. And what we're going to see here in just a moment, there we go, is what I wanted to also share is that 2025, and maybe people know this, but these are the charts that we're looking out here are yearly time frame charts. The top panel's got the Dow, the S&P, and then the NASDAQ. And now below that, you've got the German DAX, you've got the FTSE from the UK, you've got the semiconductor index from here in the US, and you've got the Shanghai, the Hang Seng, and the Nikkei. Those yellow lines are the 2024 highs. We have a global, worldwide rally that's going on. This is not a concentration of capital flowing into the U.S. It can't be. It doesn't work that way. If there was a concentration of capital flowing into the U.S., we would not see all of these other international indices moving to the upside. So you see this and, kind of put it together with the Amazon chart. Again, I'm not talking about the daily moves, but intermediate term and long term. Looks like we're going to go after those targets. And as far as, maybe reasons why, and I'm trying to work on something for subscribers where we can really try to be more clear about this. But if we take a look at just the 30-year Treasury here, and we can see how it's moving higher from 80 into 2020 out there. And so, it's moving higher. People are buying bonds. There's trust in government. And then what we've seen since then, basically since the COVID crash, is a lack of trust in government with bonds moving lower out there. So, and this is not just people moving out of bonds and into this. this is worldwide. And I think worldwide, people have a lack of trust in governments out there. So they're going after hard assets, gold, silver, going after stocks, owning companies out there versus debt. So just thought I would share that with people. What I really wanted to chat about, because of what took place on Friday, was the U.S. dollar index. So, and this is a monthly chart of the U.S. dollar index, and you can see the bottom. You go all the way back to 2008. So that's when we bottom. We can see that price is trading in a rising price channel. We're just back a few weeks ago. Or in September, I should say, price pulled back and tested the bottom of that rising channel. Tommy, that price channel was put in all the way back in here in 2022. They're amazing, aren't they? How price can fall along these channels.
So clear, right? I mean, it's, and it's hindsight, but you know what? That became foresight, as in at some point that is a long channel, man. And when they are that defined, it's pretty cool. It is.
Yeah. So I think right now what this is telling us is that this is the monthly chart we're looking at. Since he couldn't bust through support, now price will try to rally up into resistance. The first resistance would be this descending trend line up there. So I think that's where the U.S. dollar is headed to. That was a longer term chart. If we take a look at the daily U.S. dollar chart, what it shows is an A to B equals CD to the upside, and that's got a price target of 101. And we actually passed the B point a couple of days ago, on Friday that is. So we took out the B point of 99.31. Here what we can see is this retracement. Now price is on the right-hand side of that C to D leg, so it's a little bit weaker than this A to B leg. But the retracement was only 43%. Typically when you do a shallow retracement like that, Tommy, the A to B equals CD pattern will do more than the 1-to-1. So the daily time frame is suggesting that we rally up towards 101, 102. That's what we've got for it. And we know that the U.S. dollar index, and this is really for everybody listening, it's made up of 6 currencies. It's made up of the euro, which is 57.6% of the weighting, the yen, which is 13.6, the Great British Pound, 11.9. The other currencies which is the Canadian loonie, the Swiss franc, and the Swedish krona. Those are the other 3, but a smaller percentage there. And here I've got the A to B equals CD pattern drawn in. Now, if we take a look at the euro, since it is the largest weighting of the U.S. dollar index, the monthly chart for the euro, I showed the A to B equals CD pattern, and last Friday, it confirmed a sell the D point top. It did it with this bearish engulfing candle. So that suggests at a minimum that the euro should pull back to the oscillator and change line. That's at 113. Or if it gets below that, maybe it's going to be a 2 to 4 month retracement. If we come back here and take a look at the euro when it bottomed, what we'll see is most retracements, we see a 2 consecutive month retracement, a 4 consecutive month, a 3 consecutive month. So I think what we're looking at here is the euro moving lower for 2 to 4 months out there. That's what's going to also push the U.S. dollar index higher. Here's the weekly euro. It formed a top. It was one of Basil Chapman's wave 7 tops, or letter G, that he's got. So the daily or the weekly time frame says price should at least get back to this breakout level at 121. So the U.S. dollar index should head higher. The last thing I'll do real quickly here, this is a chart. People should take a snapshot of it. Just because the dollar is going to move higher does not mean that gold's going to move lower or that the S&P is going to move lower. In fact, if you take a look at 2024, we had all 3 of those moving higher. And there's plenty of other years where we have that example.
Steve, that was great stuff, man. Folks, if you want a more in-depth analysis of everything Steve's talking about, check out Mastering Probability, run under that newsletter tab, and check out Trader's Edge tomorrow. Steve, thanks so much, man. We'll be listening tomorrow. Have a great night.
Take care, you too.
We'll come right back, folks.